So we have Bitcoin coming all the way down to $52,000, of course, wrecking and a lot of the altcoins, which is actually what we spoke about as a potential scenario throughout this week. We said sit on the sidelines until such time as price leaves the no trade zone and enters either into $52,000 region, which is now what we've seen, or it breaks above $65,000 to shift the structure back bullish. So we have a whole lot to look at today. You can see over here, we do have, of course, most of the coins now absolutely wiping out those weekly gains. HNT, Helium standing above the rest of them with 10% gains. We have stock over here up 16.3%, and the daily, also a couple of coins trying to bounce out of these key lows. So we're going to have a look at that and a whole lot more. Make sure you smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content. Why is the crash taking place? Well, there's a lot of fear that's happening right now around the stock market. And you've seen that it hasn't actually had a single day of green yet in September. And if you have a look at this, it's wiped out 1.7 trillion of the market cap so far. And he says over here, this is at least according to 𝗕𝗬𝗕𝗬𝗕 letter, maybe rate cuts aren't what the market wants after all. Remember, once rate cuts come, it gives us an indication of, are we going to have a soft landing or hard landing? At the end of the day, there must be some form of landing. And of course, we all hope for a soft landing, but even a soft landing could bring prices down lower. So we'll have a look at that, where those levels are. And the other panic that's coming into the market is due to the uninversion of the yield curve. And if you have a look over here, it officially ended the longest inversion in the bond market history. That was on Wednesday. The difference between the 10-year and 2-year treasuries closed positive, and that was after 565 consecutive sessions of uninversion, breaking the previous record, which occurred actually in the 70s, where the yield curve was inverted for 410 days, right? And over the last century, it says over here, most recession started after the yield curve turned positive once again. And we've had a look at this before. We had a look at the relationship between Bitcoin price and recessions. We've had a look at the relationship between the stock market and recessions. And actually what we found is, leading into a recessionary environment, by the time it is considered a recession, the bottom is pretty much in. Most of the time, that's the case. There have been 2 occasions where prices did actually go low. And you can actually look over here at the uninversion of the yield curve on the S&P 500 chart, and then the gray zones, if I click it on and off the screen over there, are those recessionary environments. So you can have a look at that. The recessionary environments typically mark the exact bottom for the blue line over here, which is the price, and then the S&P 500 does trend up. The exceptions to this particular rule was this 2000 and leading into the 2001 period, as well as the 2008. That one did go a little bit lower once the recession did actually begin. But what about the yield inversion? What does that exactly mean? Well, it's going to be very, very similar to the recessionary environment. You can see that actually when you zoom into this and you have a look at the yield curve uninverting and what happens to price, and I can zoom in over there. So the yield curve uninverts, what happens to price over here? You do go in for your landing, but after that, the S&P 500 continues to trend up towards new highs. So will this time be different? Well, again, it's kind of unevenly split over here because the yield curve uninverted over here. S&P 500 went up for quite a long period of time and then only did a crash after that. So I think for now, trade the chart that's in front of you, focus on the chart that's in front of you, and have a look at that. The target rate now for the 18th of September, which is going to be where the interest rate decision is made, has now risen to a 70% probability of just one interest rate cut. So we'll keep an eye on that. Stock market, of course, not liking the news, coming down over there, retesting. We said it is possible that you'll come back towards some of this wick over here and meet up with the 200-week moving average. That is going to be at $5,187. And then you do have a horizontal right now for the Nasdaq, which is coming into, and just marginally below that trend line over there, we'll give it its 1.47% away. You will also be hitting the 200-week moving average. We also spoke about Coinbase, right? So Coinbase, we said, is most likely going to sweep this level over here. It's going to break down from this. This is a lot of pent up liquidity in the form of longs underneath, and that's most likely going to send price from the current level that we had looked at down 27.62%, which which you can see it's on the way down into that zone. Now, this likely presents a massive opportunity. We've had a look at this for a lot. This is no surprise to us. It's all part of the seasonality. We've spoken about this for a very, very long period of time. And the fear and greed index over here now coming into fearful zone for the stock market. DXY still in free fall over here. It had a small bounce up with the stock market coming down over there. But overall, we're still looking for the deeper breakdown. The crypto fear and greed index also coming into, again, that extreme fearful zone. Let's just refresh. I feel like based on where price is, it should even be low. But no, 23 on the fear and greed index over there for the crypto markets. And then the funding rates now flipping positive, which is what I said is something that I'm looking for to line up for a great buy the dip opportunity. I'm still sitting on a massive cash position waiting to deploy. I still have not yet deployed, but now I am getting very, very interested based on the current levels that we're at. I do think it's possible to come a little bit lower, talk about what that would look like, but nevertheless, we're looking for the negative funding over here. This is showing that there is aggressive shorting coming into the market into specifically key levels. That's what you need to look for. Is the shorting occurring while price is coming into significant key lows? And if so, well, it could present an opportunity, just like we saw with COVID. We had the presence of the negative funding over there. We had it again over here when Bitcoin was at $10,000 leading into the next major markup phase. We had it again over here with the FTX lows, the USDC DPEG, and then the yen cash and carry trade, right? Creating negative funding. It did flip positive on the weekly scale, but dailies were negative in those low regions. And now we're starting to see the slight presence of that once again. At the end of the day, you cannot deny it, though. The trends are definitely down, right? The trends are definitely down. And therefore, that's why we said wait for those key zones. The key zones, we've now hit $52,000 or break above $65,000, and now does become decision time. But understand what you're playing with. You're always taking a risk when you're trading against the trend, and there's no doubt about it. This trend is towards the downside on the total crypto market cap, on total 2, strong towards the downside, total 3 towards the downside, and others also towards the downside, with these EMAs expanding away from one another, and that starts to create those strong trending moves. So if this is in fact going to hold up as a bull flag, well, you would expect that bulls should be taking control very, very soon, because you are coming into the lower boundary of that flag right now. You've also filled the 50% level of the wick, which we outlined as a significant zone of interest, right? There it is. The 50% level target on the weekly wick was sitting at $53,610. We wick through that level. Price is starting to move up over here. But until such time as you can reclaim and break structure, getting above $65,000, the trend will continue to remain down, right? So even a big bounce over here that fails at $62,000, $63,000 becomes yet again just another lower high. And you are stuck below the 21 EMA as the most simple analysis you can ever have in the history of the world. It would be this, right? The most simple analysis would suggest, let's just quickly turn that off over here. Let's turn off all the drawings. The most simple analysis suggests that if price is capped below the 21 EMA and it's angled down, which it is, then you want to be out of the market. If price is above the 21 EMA and it's angled specifically towards the upside, you want to be holding long and strong, and you want to be in the market, and that keeps you in for those strong trading moves. So what are the worst case scenarios over here? How far down could price potentially go? Well, if bulls fail to shift the trend back towards the upside and we continue to put in lower lows and lower highs, and we threaten this bottom of the wick from the candle that occurred on the 5th of August, I would then start to have to target the yearly open. And this is significant. We've spoken about this before, where we said that oftentimes what you'll see is the yearly open get taken out on Bitcoin before leading into the final phase. That's wave 5 of the Elliott wave, leading into the blow off tops of the bull runs, which probably only comes sometime next year. So in a worst case scenario, you're looking to sweep the yearly open. A sweep below the yearly open would mean that Bitcoin would have to drop below $42,266. Now, if you're out of the market and you're very, very conservative, I keep saying this over and over again, all you have to do is to wait to create a higher high, which currently would mean a break here above $65,000, and then create the next high low. That would show a shift in momentum, a shift in the trend, and that bulls are taking back control. If you're a knife catcher, well, then you might be playing a different game, right? Knife catchers look to buy, at the lowest price that they possibly can, whilst taking as little risk as possible, meaning you have very, very tight stop losses. So a knife catcher may be looking for price to bounce off the low low boundary over here of the at least the flag from the bear flag or the bull flag formation, and a tight stop loss as well below this low over here. But the fact that we took out the prior 2-week low off of a bearish engulfing candle is a warning sign on the weekly, right? We spoke about that full bearish engulfing candle last week in relation to the prior week's candle, which set in the lower high. That was a bearish sign that you were going to continue down. Now, in terms of September and seasonality, where are we at? Are we deviating away from the norm? Is this time different? That is the multi-million-dollar question, or even billion-dollar question out there. As Benjamin Cowan says over here, the average return of Bitcoin in September is usually negative 0.3%, right? That's the average return. You have to wait for the closing candle to see what we are at on average. So far, BTC's return this month is already negative 8.616, so deviating a little bit away from the 6.3. The only time in the last 5 years where September monthly return was worse than this was actually in 2019, which we do have a lot of similarities to in terms of price structure, which would be a mid-cycle correction, right? We'll talk about these cycles and the duration of these cycles, right? Mid-cycle correction happened in 2019, and you remember what came next in 2020 leading into 2021, and that was 13.91%. If BTC closes this month at this price, it would be a fairly typical September, completely normal. That's what he suggests over here, and this is pretty much exactly on par, right? This is what we said. We said looking for a seasonal low between July, August, and possibly September. Well, most likely September. It was least likely to be in July, most likely to be between August and September, and now you're coming into that low period. Keep in mind, theoretically, price is still higher than the wick low that we created over here. So let's keep an eye out on this region over here. This is where we said that the inflection point timing wise happened in the price cycles was between mid-September and the beginning of October. Within this block over here is where we saw all the price cycles slowly start to mark on towards the upside. So if that does happen, this would be what you would say is one of the biggest bear traps of all times. What is a bear trap? Well, ultimately, it's where everybody flips bearish over here and flips towards the downside, only for price to start to reclaim key levels and trend back towards the upside, trapping them in their bearish mentality, looking for lower prices and deeper corrections and the end of the bull run, and then price starts to rip in the opposite direction. So to actually give you a chart, which I've given many, many times before, but since there may be new viewers here who are panicking in the market, let's have a look at it. This is comparing to the prior cycles, right? So if we are currently cycle 5 over here, which is in purple, and you may want to zoom in on a bigger screen to see this. Unfortunately, I can't make these lines thicker. Let's compare where are we at within this cycle in comparison to the last cycle, which was 2021, right? There we are. This looks perfectly normal, right? Here was your 2019 period, which I said has a lot of similarities. We can argue that, you know, you had the downturn over here within this region, and ultimately had COVID not happened, then you wouldn't have had that deep flush towards the downside, but most likely price would have just slowly started to grind towards the upside. So price is ultimately broken back in line with where you would expect the previous trends to be. Now let's have a look at cycle 3. This one looks even more similar, right? Here's cycle 3. We've been tracking along more or less similar to that. Let's put both on. Cycle 4, or cycle 3, 4, and 5, 5 being the current cycle. And does this look abnormal to you? Well, we can zoom in over there. Does this look abnormal to you? Have we deviated away from normality? Is this time different? Well, according to this chart, this time is not different. This is a mid-cycle correction with the expectation of the cycle continuing all the way on to approximately October next year, which would give you just a little bit more than 12 months of bullish price action, right? Slow grinds, and then it starts to get aggressive only towards the end of that part of the cycle. But again, guys, I want to be absolutely crystal clear. I'm sitting on a cash position right now because I'm waiting for the trends to flip back up. So although I'm talking with a bit of a bullish long-term bias, there is absolutely undeniable evidence that the short-term and medium time frame is bearish. We are in a downtrend, and we've spoken about that for a very long period of time. If this confuses you and you want to learn more about this, remember, we do take signups for Whale School for absolutely free. It doesn't cost you 1 cent. There is a link in the description below. Please use that exact link. Go through to Whale School, click on that link, it'll take you through to this page over here. Click sign up over there. Go through the processes because we have limited spaces. Usually they get filled up completely about a week before we actually start. So click quick get started over there, you'll see we have a whole lot of alpha within those groups. Another thing that I'm having a look at over here is the RSI, which is continuing to trend towards the downside. You can see it's calmed down and moved towards the oversold zone, giving a valuable reset within the market, typical of those mid-cycle corrections. And if you look over here, according to the last time the price action occurred with BTC moving sideways and the RSI fell down into the zone, it was also ironically in September, right? This is September now. That was September back then. This is where price was capped at about $25,000. Everybody was saying we're going lower, it's over, and ultimately what happened is a strong reaccumulation. So from a fractal perspective, if you do see price continue to run sideways over here and reaccumulate with bears failing to break price below that wick low, then ultimately that's what could potentially play out. So here it is. This is the chart. These are the zones that we outlined. You'll remember I took this big circle over here and I highlighted this in the last show, and I said, you know, this is your no trade zone. Simply just wait for price action to hit one of these levels. It either takes the bottom level over here, which is now what we've seen, or it breaks above the $65,000 level, ending this downtrend. So as price moves into the zone, we spoke about as well the presence of the bear moon over here, which printed, and that will provide downside price pressure for the market for about 15 days. If bulls can defend this into that 15-day mark, so let's measure it out. If bulls can defend this, pretty much it should be into the towards the end of or the third week of September. So that's going to be the 18th of September. If they can hold price up and stop it from breaking below $50,000 to $52,000 by the 18th of September, then bulls will have an opportunity to once again strike back and hopefully create a high low, send prices higher, and then maybe sometime in October you'll look at a breakout above these key levels. So that's what we're watching over there. 9 and 18 exponential moving average continue to trend towards the downside in a bearish posture. This has been aggressive. When you get the aggressive moves down, expect that there will be snapbacks. When that snapback occurs, watch for the underside retest, testing this zone as resistance. That's going to be around 55K, right? So we'll pay attention to those zones, but this is the level that we've waited for quite a long period of time. Showing it to you a little bit more precisely, we showed in the Whale Room Discord. If you go through into the, here it is, we can go through and have a look. If you go into the Whale Room Discord and you go under my section over here, you'll see this was something that I outlined quite a while back. I'll scroll up over here. We're having a look. There it is. We spoke about this. This was the rejection of the 50 EMA, looking to target price down into $53,000. The warning signal based on the posturing of that candle. So that is, of course, in the Discord. There it is, zooming in. We got that. And ultimately, had you taken that trade from the moment that we gave it, well, the short trade without leverage would have provided a price move of 11.73%, now coming down into this low region. And you can look at the demand coming in, respecting that horizontal level. So all in all, we've seen what we needed to see in that regard. I just want to go back on the daily time frame. Let's quickly measure out this level. The inefficiency on the weekly and the daily might be slightly different in terms of measuring 50% of that wick. So let's just have a quick look over here, measure out 50%. Okay, we haven't hit it yet. So daily time frame, it is possible. Maybe you sweep one more time down, but this is pretty close, right? You came down to exactly 52,555, taking some of that liquidity. This was always going to be a drawn liquidity for price to possibly come back down. It could come a little bit lower, maybe 51,537 off of low volume over the course of the weekend, right? It is going to be low volume right now. So pay attention. There is a lot to play for. We also can go into the Discord over here and you can see that at least the deltas in terms of longs and shorts is currently much more shorts running in the market right now. Usually this doesn't bode well when you're shorting into support, right? So be careful about continuing to short. Most short traders will be looking to take profits at these regions, which is where you start to see the bounce. If, again, the bounce leads into underside resistance and a lower high, another rejection off of the EMAs, that's where you might see one more sweep a little bit lower. So that's what we're watching over there. Again, for those of you who do want to trade the markets, there is a non-KYC exchange called Blofin. Absolutely amazing interface, same as Bybit, look and feel. You got 3 days left to participate in this initiative over here, where when you sign up, they're actually going to give you, for every $100 that you put in, $10 worth of 𝗬𝗎, and then you can come and spin the wheel as well with a chance to win more. So the link is below. Click that specific link if you want access to the wheel, which you can spin, and the sign-up bonus. You can win 𝗬𝗎, Injective, Rune, Mantra, or you have a very, very small chance of hitting nothing, which is going to be the good luck try again spin. All right, let's continue on over here. I just want to quickly have a look at this to see what sort of orders are overhead in terms of big sells, which could be underside resistance. Okay, we got about $1 million coming in at $55,000, so that's an area to watch. You did have some huge fills that occurred in the low region. You do still have more orders, $2 million sitting at 51,000. We have another $1.47 million sitting down here at 50,900, and here's quite a big one with $8 million waiting to be bought up at 49,963. Are there any bigger ones? Let's see. I think that is probably the biggest one, is going to be this $8 million order size sitting just below $50,000. So let's keep an eye out on that. Let's have a look at the rest of the markets over here. Bitcoin dominance coming down ever so slightly. It was interesting with the sell-off. I saw a lot of altcoins showing signs of strength. One that we've spoken about a lot was actually 𝗬𝗎, right? 𝗬𝗎 showing signs of strength because we've been looking for the possibility of a higher low within this region. Now, it's not clean and picture perfect in the sense that I wouldn't mind seeing a wick that looks something like this into the low boundary of this parallel channel, but definitely some bidding going on in there. And look at the altcoin sector over here trying to bounce off of these lows. Let's take a look quickly at Injective. Okay, still coming down towards the apex over here. Probably not a bad DCA zone. TON also holding up over here at the lower support region. If it does lose this, it's coming down to $3. 𝗕𝗬𝗕𝗬 has 𝗕𝗬𝗕 hit our level. Perfect. Look at that absolute perfect wick into that region. I'll have to look to see if my limit orders were filled. We were targeting that exact zone at 14 cents, right? 14 cents over there. We hit that level. If we do start to show signs of reversal, look at that immediately closing back above the trend line. That one's looking pretty good over there. 𝗕𝗓𝗓 looking over here, not too great. It's average. Solana. Okay, Solana is still holding up. We are going into the Solana Breakpoint conference coming up soon. So let's see if this can start to get moving into that conference. What other ones have we been eyeing out? Let's see. Okay, Mantra starting to break down. That's the only issue over here. Massive buildup of liquidity. Obviously not a good sign on this real world asset coin. It could come all the way back down to 65 cents. All right, let's have a look. Scrolling a little bit further to see, maybe we should have a look at some of the meme coins. I do want to talk about Brett. Brett's putting in triple bullish divergence over here. Momentum oscillator putting in higher highs and price putting in lower lows. This could be the region, right? This could be the region where you start to see Brett making a move. Let's take a look at some of the stronger ones like PopCat. Okay, PopCat almost coming down to our level at 40 cents over there. It got as low as 46 cents. We'll keep an eye out on this one. You may still have one more sweep down. Myro pretty much all the way at the bottom of this zone over here. Definitely keeping an eye out on this for maybe a future bounce. Okay, let's see. Other ones to look at. Anything else sticking out like a sore thumb? You got Nairo up a whole lot, 30% over here. That's pretty substantial. So Nairo up 30%, breaking all the way back into the top side. Not an easy one to trade, though, if you consider the way this price chart looks at the moment. All right. So again, also a reminder, guys, any of you that do want to participate in the Cybertruck giveaway, this is where we're giving away a full Cybertruck to anybody that's trading on Bybit. You get a raffle ticket when you sign up using the link below. 8 days left to go for that competition. So take advantage of that while you still can. And I also do want to remind you, as we lead into the next phase of the bull market, right, as we move through the various trajectories into the final blow off top, this is where the hackers and scammers come in full force, is in the final 20%. I teach this in Whale School and Whale Room. It's the Pareto principle, right? 80% of all your profits are going to be made actually in the final 20% of the bull run, which is probably going to be, you know, somewhere around here between day 900 leading into 1068. Protect your assets, protect your capital, make sure your cybersecurity is rock solid and tight, and at least put your long-term stuff on a ledger. There's a link below which will give you access to $10 worth of Bitcoin when you get a ledger. At least even if you get the baby ledger, right? You don't need the Mondo top of the range ledger stacks, but if you have the capital to put it in and you want to protect your assets, consider getting that one. But at the very, very least, just get a Nano Ledger S Plus. There's a link in the description below. And that's it from me, folks. I will see you all on the next one. I hope you all have an absolutely stellar day. Let's see how price reacts off the 52K range lows, and I'll catch you on Monday. Cheers for now.